All right, good morning, everyone. It is 8:25 on the morning of December 20th, 2022, and this is my pre-market strategy session. So the title of the video this morning is QQQ support at 267.76. And that is the bottom of the gap, and here's the gap right here in between these two yellow dashed lines. The trick today is going to be, kind of what happens, right? So it's always the deal, what happens. It's, always how things work. Let's see, the previous day's low, absolute low here. I'm going to switch back over to the 10-minute here for just a second. Yeah, we're right at the previous day's lows here in the pre-market right now. And we're close to oversold in the pre-market as well. So I was expecting this move to occur. I was expecting the gap to get filled before Christmas, before the week before Christmas. Usually the week before Christmas, there's a Christmas rally. So right now we have including today, 4 more days of market activity, 4 more days of the open market before Christmas. And usually the week before Christmas there's a rally. I was looking for this gap to get filled before yesterday. And unfortunately, it didn't fill the gap before then, which kind of sets it up to be a little bit more bearish. I really want to be bullish for the Christmas rally, but the late sort of bear action here happening right before going into Christmas is, it would have been great for it to have happened back here. It would be much easier for me to get bullish right now if we had already tested this 267.76 level and then started to move away. So what happens today? Well, my guess is, and this is just a guess, of course, is that let's see, we're looking kind of a little bit oversold in the pre-market here. Let's look at the VIX here real quick. Which actually, the VXN is actually the volatility index for the NASDAQ. But I don't like this volatility index. I don't like the way that it moves. It's not as exaggerated, or it doesn't quite illustrate to me what's going on with the NASDAQ as closely as the VIX does. All the markets tend to move, together. Yeah, if the Qs opened up right now, they would open up about almost a 0.5% lower than its previous close. And so according to all of the what's going on right now, I imagine that there's going to be the open at 9:30. Let's go over here at 9:30. It'll be a dip down and a move back up. Now, if that happens, if it does go down and move back up, I'm going to get bullish for that move back above 267.76. Of course, then also it could we could end up having, instead of a bullish, Christmas rally, this thing really could just drop down, retest, and then roll over too. So that's just kind of the plan for the day, if in those two scenarios, and that's kind of what I'm looking for being either in a bullish trade or a bearish trade is, does it just slice right through this price, come back and retest, and then take it back off to the downside? If it does that, I'm going to get bullish, or I'm going to get bearish. I'm going to start buying puts. If it dips down here, finds support, and runs back up again, then I'm going to be bullish, and I'll be buying calls, probably for the week. So I'll probably buy strikes that are that have about a month, maybe a month and a half expiration, and look to hold them for the week. That's my plan. So here's the VIX. You can't really chart the VIX, but I do anyway. And so here we have a trend line on the VIX, and right now the VIX is below the trend line. Breakdown below this 1912 would be great. The 10-year, 2-year spread is opening back up. Let's see if that's because the 10-year is gaining more than the 2-year. You can see here 10 years a nice move up, and the 2-year is kind of flat. So that's giving us a oops, I hate it when I do that. That's giving us a nice little bit of momentum in the market. It means people are selling their 10-year bonds in hopes that the economy is setting back up again. So gold, it's my personal belief that gold went through a distribution pattern here, and that we're going to see lower prices for the foreseeable future in gold. It ought to come back down into this kind of trend line right here relatively soon. I'd say within 6 months or so. And then Bitcoin is back. Here's a trend line on Bitcoin, and so it popped back up above. It broke down below the trend line here, popped back up above, and then kind of started taking off to the downside, popped back up above a little bit, and started to drift sideways for a while. Now it popped up again, and then had another hard drop, and now here we are at another pop up. Now eventually, one day, at some point, Bitcoin will pop up and then stay and continue to go up, but it's not anytime soon. This trend is in place, and anytime it gets kind of above this support and resistance line right here, it's a good opportunity to start going in short on this thing. And so here we have another opportunity to go short. So selling the rips on Bitcoin is definitely paying off. All right, everybody, that's my pre-market strategy session. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.